Aussies can avoid getting into credit card debt by looking out for these 5 traps. Many consumers enter the new year buried in credit card debt, but before the situation escalates any further, these are 5 plastic traps that could be catching you out. David Koch on whether you should get a credit card. 1. Know your annual fee. The annual cost of just having the card before you even spend a cent is critical because lenders can slug you up to $700, new analysis by financial comparison site CanStar shows. Watch out for this charge, particularly on balance transfer cards, if you are trying to wipe debt fast within a honeymoon. 0% interest-free period. Being hit with annual fees can hurt. And if you have a 24-month interest-free period, you will be hit with this charge twice over 2 years. 2. Check your interest rate. This may sound obvious, but many card users have no idea what interest rate they are paying, so it's vital to check. Rates vary far and wide. Some deals are as low as 8%, while others are nearly 4 times this at around 30%. CanStar spokeswoman Belinda Williamson said, "If you can't pay off your card in full by the due date, you'll be hit by interest on the next statement." If you had an average daily balance of $5,000 on your credit card and an interest rate of 14.06%, if you weren't able to pay it off in full before the monthly due date, you could be charged up to $59.71 in monthly interest, she said. 3. Making minimum repayments. If you fail to make a minimum repayment on the balance owing each month, you could also be hit with a late payment fee. These can be up to $35. Usually the minimum repayment required each month is 2% of the total balance. 4. Choosing your credit limit. This is important because when you go to borrow again, for instance when signing up to a home loan, regardless of how much you owe on the card, the total limit amount will be taken into account as a debt. This can impact how much more you can borrow. However, the Commonwealth Bank's general manager of credit card products, David Singh, said there are some cards that allow you to take control of this easily, including their bank's phone app and net banking. Customers can apply to increase their credit limit or immediately decrease their credit limit in real time, depending on their financial needs, he said. 5. Rewards points programs. Are these programs worth it? Depending on the way you use your card and whether you can pay it off in full each month, chasing rewards points may leave you worse off. Mr. Singh said it needs to be thought through carefully. Awards cards offer customers some really useful benefits, but it's important to consider how much you plan to spend on the card as well as how you plan to manage it, he said. Awards cards tend to suit customers who are able to pay the monthly balance in full. At Sophie Aylesworth,